Welcome back to the channel. If you have been tracking the absolute structural core of the artificial intelligence infrastructure trade, you already know that the mainstream financial media is fighting the last war. Look at a live screen right now. Applied Optoelectronics, ticker Aaoi, is trading through a high-octane volatility loop following its latest blockbuster quarterly print, hovering dynamically in the wake of multi-month vertical sweeps. Retail investing platforms are buzzing. Reddit threads are split between euphoric breakout chasers and jittery swing traders panicking over a newly announced $600 million at-the-market equity distribution program. Standard financial commentators look at this stock and hyperventilate over backward-looking valuation multiples, trailing GAAP net losses, and headline-grabbing insider sales executed via pre-arranged 10b5-1 plans. They see a speculative, high-beta hardware play that has run too far, too fast. They are completely missing the physics. The real story of Applied Optoelectronics has nothing to do with traditional stock chatter and everything to do with a brutal, unyielding engineering bottleneck, the copper wall. As hyperscalers cluster hundreds of thousands of advanced GPUs into monolithic training nodes, electrical interconnects are hitting a catastrophic thermal and physical limit. Electrons simply cannot travel across copper traces at high enough speeds without degrading into thermal waste and severe signal attenuation. The entire modern data center is undergoing a violent architectural transition toward optical interconnects, and companies capable of manufacturing high-speed optical transceivers at scale are the absolute gatekeepers of the digital economy. When Aaoi reports its fifth consecutive quarter of record revenue, printing $191.9 million, an 86% year-over-year explosion, while simultaneously returning to non-GAAP profitability, retail investors looking at daily red candles are getting shaken out by institutional heavyweights who understand the demand for 800G and 1.6 TB optical products is actively outpacing global production capacity well into mid-2027. Market dynamics and institutional positioning. To understand how the smart money is playing this volatile landscape, you have to look past the superficial noise of daily trading volumes and macro jitters. Over the past several weeks, Aaoi has experienced textbook institutional accumulation masked by high-frequency volatility. When Treasury yields spiked and the broader semiconductor index suffered sharp pullbacks, retail participants panicked, dumping shares into the open market. Yet behind the scenes, institutional blocks were steadily reabsorbed. The recent deployment of an ATM facility, while triggering short-term dilution anxieties among retail traders, represents a calculated, opportunistic corporate maneuver designed to fund aggressive manufacturing expansion. Management is aggressively scaling up monthly production capacity toward a targeted 650,000 units of 800G and 1.6 TB transceivers to meet an unrelenting wave of hyperscaler demand. The options market and short interest metrics tell a story of immense tension. With a high beta and massive structural short interest historically attracted to the name, every positive guidance update, such as robust third-quarter revenue projections scaling up to $290 million, acts as fuel for sharp short squeezes, followed by calculated consolidation phases where institutional algorithms harvest liquidity from impatient retail margin accounts. While financial television anchors fixate on a senior vice president executing a routine, scheduled block sale under a 10b5-1 plan, institutional desks are modeling multi-year compounding free cash flows derived from high-margin optical modules going directly into Tier 1 cloud data centers. Before we break down the operational segments that make this growth engine tick, let us pause right here. Are you currently holding Aaoi shares through this violent volatility storm, or are you sitting on the sidelines waiting for a deeper technical pullback to build your position? Drop your thoughts in the comments below. Business model and historical context. To properly value Applied Optoelectronics today, you must completely purge your mind of its historical framing. For years, Wall Street boxed Aaoi into an outdated, cyclical narrative, categorizing it as a legacy supplier dependent on volatile telecommunications carrier spending and old-school cable television infrastructure upgrades. During those legacy cycles, customer concentration risks punished the stock severely whenever a single major cloud or telecom titan paused its capital expenditure cycle, leaving retail investors with severe scars. Today, that historical blueprint is completely obsolete. The modern business model of applied optoelectronics is anchored by two explosive, high-growth demand vectors: high-speed data center optical transceivers for artificial intelligence infrastructure and next-generation CAT TV broadband upgrades. The data center segment has transformed into an absolute juggernaut, posting triple-digit year-over-year revenue as cloud giants race to interconnect clusters of accelerators. Within this segment, the commercial transition is moving at light speed. 400G products have scaled massively, while 800G shipments have more than doubled sequentially, and early commercialization of 1.6 TB transceivers is already underway. Simultaneously, the CAT TV segment is experiencing a historic renaissance. Far from being a dying legacy market, cable operators are aggressively upgrading their networks to DOCSIS 4.0 specifications, exemplified by major commercial wins like Medicom selecting Aaoi's high-performance 1.8 GHz technology. This dual-engine architecture means applied optoelectronics is no longer a fragile single-product bet. It's a diversified, vertically integrated optical powerhouse controlling its own manufacturing destiny from laser design to final transceiver assembly. Future outlook, catalysts, and risks. Looking out over the multi-year horizon, the structural catalysts driving applied optoelectronics are extraordinarily robust, though they are accompanied by distinct operational risks that demand disciplined risk management. On the catalyst side, the secular tailwinds of artificial intelligence cluster scaling are inassailable. As large language models scale into the multi-trillion parameter era, data movement inside the data center becomes the primary operational bottleneck. Optical transceivers are no longer optional accessories, they are mission-critical components without which modern AI training halts entirely. Aaoi's ability to scale its manufacturing footprint toward a capacity approaching hundreds of thousands of advanced units per month positions it squarely as a vital supply chain gatekeeper. However, prudent investors must weigh these immense tailwinds against tangible execution risks. The company operates in an unforgiving manufacturing environment where unexpected component shortages, such as memory constraints affecting customer switch availability, can cause temporary revenue shifts. Furthermore, capital expenditure cycles among mega-cap tech spenders remain inherently lumpy, and valuation multiples will inevitably compress if execution stumbles or gross margin expansion hits unexpected speed bumps. Geopolitical supply chain sensitivities and intense competition from larger optical peers require management to maintain flawless operational precision. Ultimately, looking past the short-term price noise, daily algorithmic turbulence, and retail hand-wringing is the only way to capture the asymmetric upside of this structural transformation. Applied optoelectronics is bridging the gap between physical engineering reality and financial market recognition. The transition to optical networking is structural, permanent, and accelerating. Keep your eyes on the long-term execution, manage your risk through the volatility, and stay positioned ahead of the curve. Disclaimer: this video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any investment decisions. Invest responsibly. Don't forget to like, comment, and share this video to support the channel.